Welcome to Lifco Q2 report for 2025. For the first part of the conference call, the participants will be in listen-only mode. During the questions and answers session, participants are able to ask questions by dialing #5 on their telephone keypad. Now I will hand the conference over to CEO Per Waldemarson and CFO Therese Hoffman. Please go ahead.
Thank you, and good morning, and welcome to everyone. We can start with page number 2 in our investor presentation and take a look at the overall numbers for the Lifco Group. And if we start with the second quarter, on the sales line, it was a softer quarter where some segments faced more difficult market conditions. We will come back to that shortly. Overall, the sales grow with roughly 3%. With a slight positive organic growth, around 0.5%. We had negative effects from foreign exchange rates of 4.4% and around 7% growth from acquisition in the quarter. In the quarter, dental had somewhat negative effect in the second quarter from a later Easter this year compared to previous year. Overall, if we go further down and look at profit and margins, we can mention already here that in general, the areas with slightly higher margins had weaker development than the areas with slightly lower margins in Lifco. We will come back to that in different areas later on. And this led to a negative product mix effect in the quarter, both in System Solutions and also in Demolition Tools had similar effects. So the EBITA declined by 2.8% because of that. And also this product mix effect had negative impact on the EBITA margin, which declined from 23.9% in previous year to 22.5% in this quarter. I'd also like to mention in the cash flow line, it declined 8.5%. Which partly has to do with a small decline in EBITA, but also due to working capital build-up, mainly in the contract manufacturing subdivision within System Solutions. For the 6-month period, looking at a little bit longer period, we had organic growth of 4%, but lower EBITA margin also there due to the negative product mix effect in Demolition Tools and System Solutions. And overall, for the 6-month period, sales grew with 9% and EBITA grew with 6%. And then we can go into page number 3 and take a little bit deeper look on the different areas. In the dental area, in the second quarter, sales declined with around 2% and EBITA with 5%. The lower development here mainly had to do with the negative effect from Easter, and also we had negative effects of obviously in foreign exchange rates in this area. If we then go further down to Demolition Tools, the sales grew with 2% in the quarter, where we actually had some organic growth that was offset by negative foreign exchange impact. The margin in the second quarter declined from 26% in 2024 to around 25% in 2025, and then obviously EBITA declined with 2%. And here in Demolition Tools, in the first quarter, as we mentioned in the last call, we saw some small indications of slightly improving market conditions, and then we also mentioned in the last call that uncertainty obviously increased in the beginning of April with the tariff situation. If we now then round off the first 6 months, we can conclude that the business area has stabilized on a demand level. And also mentioning here that given the fairly low order books we have in this area, the numbers we present in the second quarter is a pretty good indication of how the market was in the second quarter. I'd also like to mention here in Demolition Tools once again that we experienced negative product mix effects where areas with slightly lower margin developed stronger in terms of sales than slightly higher margin areas. But also in Demolition Tools, I think it's important to mention that we have historically had variations in margins between quarters. So a variation of 1 percentage point up or down is nothing unusual for this business area. And then if we take a look at the 6-month period for Demolition Tools, we have developed well with 5.5% sales growth and 13.7% growth in EBITA with increased margins for the first 6 months. If we then go further down to System Solutions, we did experience somewhat weaker development in the second quarter. Net sales grew with 7%, but the growth engine was once again coming from contract manufacturing subdivision. Obviously, the growth rates went down significantly from previous quarters. Just to mention here, we had 95% growth in contract manufacturing in Q1, and this now went down to 17%. And this is something we also indicated that we saw lower volume in April in the last earnings call, and this now translated into 17% growth in the quarter. But still, it had impact on sales in the growth numbers of the business area with 70% growth. If we go further down and look at the EBITA, it declined 2.8% in the quarter, and this mainly has to do with weaker market conditions in several parts of the business area. EBITA margin declined from 25.1% to 22.8%, and this is a combination of the negative product mix effect that we see here, but also some areas, obviously, the declining sales organically, which led to lower margins like for like in those areas. In addition to the above effects, we also experienced almost a percentage point, 0.9 percentage points lower margin in the business area due to what we called onward invoicing of surplus material within contract manufacturing. And this is an effect of the growth rates going down significantly in this area, which led to too much material coming into Lifco in entities from sub-suppliers, and there we can then invoice those material without any margins to the customers. And I also would like then to round off by saying the areas where we saw the weaker market conditions in Q2 were within environmental products, transportation products, and special products. And these areas have exposure to many sub-segments. But there was, I think, in this quarter, in general, a lower willingness from our customers to make decisions to invest in our products and solutions in the second quarter compared to the first quarter. And then we can go into page number 7 and just take a little bit look on the financial position. The net debt to EBITA remains stable at 1.3 times interest-bearing net debt to EBITA. And this means that we continue to have a very solid financial positions and are able to make or to continue our strive for making more acquisitions in profitable and interesting niche companies. We continue to gradually increase our capacity to be able to every year evaluate more opportunities. But once again, the actual outcome of when acquisitions materials will and should always be a bit volatile. We should only acquire great companies when we feel comfortable about those businesses and when the valuations are at reasonable levels. And then we can go into page number 8 and take a little bit longer perspective on Lifco. We have now for quite some time had a little bit slower growth in Lifco in 2023 and 2024. They were difficult years for us, mainly due to our construction exposed businesses within Demolition Tools. And in the first 6 months of 25, at least we see stabilization and even some growth in those areas from quite at least from lower levels. And after 6 months in 2025, we have grown our EBITA with about 6%, which is obviously lower than what we strive for and lower than our historical average. But we work very hard to once again try to achieve our target to increase our profit every year, even if the market situations were not the best in some areas during the second quarter of this year. If we then go all the way down to page number 34, we can just have a quick look at the outcome of our acquisition work in this year. We have announced 9 acquisitions so far this year. It's once again a good mix of high margin niche companies. And in total, these acquisitions had net sales of slightly more than 1 billion Swedish krona. And with that, I'd like to open up for any potential questions.
If you wish to ask a question, please dial pound key 5 on your telephone keypad to enter the queue. If you wish to withdraw your question, please dial pound key 6 on your telephone keypad. The next question comes from Carl Ragnerstam from Nordea. Please go ahead.
Good morning, it's Carl here from Nordea. A couple of questions from my side. Firstly, starting with contract manufacturing business. You mentioned that you had the 90 basis points margin headwind from forward invoicing of materialized. You mentioned the reason why. But I wonder how sticky is it? Of course, you said that growth rates are deteriorating while you ordered maybe not too much, but a little bit in that direction at least. How sticky is it? Should it continue a couple of quarters, or how should we think about that? And what materials are we talking about?
So first of all, in some of these areas, we call it the material supply chain has a long lead time. So to be able to produce in the second quarter this year, you have to make commitments way before that time. So that's the effect that we experience now when growth did not materialize the way things were looking maybe 3 months earlier. So that's the effect that happened here, and then we can then invoice those excess material to the customer. I guess maybe also looking forward, how will things go in this area going forward? I'd like to remind everyone that the growth started to take place in the third quarter of last year. So now we are sort of meeting more higher sales periods going forward. Having said that, maybe I should have mentioned that it was in the beginning of the quarter actually lower activity, and the activity in this area went up a little bit gradually during the quarter. But we still don't know exactly how the activity level will be in the second half of the year.
And do you think that the customer, if we see continued or demand levels at the current level, do you think that the customer of yours will continue to accept the material you're pushing forward, or do they have any clauses that they could say no, and you need to sit on the material with, I guess, some risk of price changes and so on?
Of course, we don't go into specific contracts, but in general, in this area, you have these type of clauses where based on the forecast from the customer, if that does not then materialize in actual sales, we have the ability to get rid of our inventory levels in that way.
Okay, that's clear. And when you were talking about an increase at the end of the quarter with a slow start, could you give some flavor to the dynamics of it? Because it's been quite volatile when we're talking 95% and 17%. What is a bad or a less good start to the quarter and a better end? Could you give any dynamics what the growth rates really are for us to determine what levels we should think about ahead?
Well, within the quarter, we had of the 70%, more of it came in the second part of the quarter. We won't go into more details on that. Once again, keep in mind that in the third quarter last year, the growth already started being very high. So we are now meeting, so to say, more difficult comparison numbers in the second half of the year. But the indication at least it looks better now in the second half of this quarter that it's coming back in. So there was a little bit of a temporary decline in the first half of this quarter.
And my final question on it, you've said before that in typical Lifco manner, you don't want to be dependent on a single customer and single contract. So it sounded a bit like you wanted to restrict how big this agreement or could really be. So when you've seen a slowdown 95 to 17, and how much are you managing yourself, and how much is determined by your customer in the volatility we have seen?
Sorry, can you repeat that part? I didn't fully hear you in the second part of the question.
No, sure. So how much of what portion of the volatility, now that we saw the 17% versus 95, and now you're seeing a better end, how much is it you determining what the volume should be? Because you've said historically that you don't want to grow this business much further, right? You said that before, I think. So is the slower pace and the ups and downs totally determined by the customer, or is it you, to some extent, managing?
You can say the following: we of course dictate how much we would like to co-invest in any customer agreement, obviously. But when the volumes decline or the growth rates go down substantially, that is of course more coming from the customer perspective.
Okay, sure. And
also much better
from...
to have a very stable deliveries and very predictable deliveries is much better from a supplier perspective.
For sure. Of the working capital build-up you had in the quarter, much was due to inventory, right, under 50 million. What portion stems from of the year delta stems from the contract manufacturing business?
If you compare the quarter, it's a significant part of the sort of decline in cash flow. Obviously, we had at the top lower profits, but if you look at the working capital segment, it has. I can put it this way: the numbers in the cash flow would have looked pretty decent without this effect.
Okay, so the absolute majority, it sounds like.
Yes.
Okay,
but having said that, it's always difficult to pinpoint the individual. In a diversified group like Lifco, things are of course happening all the time. But in this quarter, this had a significant impact. That's also why we decided to specifically mention that in our quarterly report.
Surely. Okay, and the final one, if I may, is on System Solutions again here. You said that you saw a weaker market conditions in environmental technologies, but also in other segments. Have you seen a sort of a significantly worsening market? Is it due to the tariffs, general macroeconomic situation, or is it more or less the same trend as you've seen before? Or could you give some insights into what you see there in the different subsegments?
Well, it's a bit difficult to we cannot say it's all it's not tariff related in the way that all our sales into the North America just dropped. That's not what's happening. It's more a general slowdown in some areas, which we will now follow closely and see how things develop in the coming quarters. So it's not so easy to say that it's because of this macroeconomic factor or that one. I think in general, if you would, when we talk to our companies and our different entities out there, of course, maybe the reluctance to make decisions on buying more capital-intensive goods has been, a bit bigger reluctance following the uncertainty that took place in the beginning of April this year. But it's a bit too early to draw a major conclusion around that.
Okay, very clear. Thank you.
Thank you.
The next question comes from Zino Engdalen Ricciuti from Handelsbanken. Please go ahead.
Yes, good morning, and thanks for taking our questions. Just a follow-up on the System Solutions there with the more, so to say, uncertainty related to customers' willingness to invest. Could you see that there was a difference if we take it month by month in the quarter, given particularly the uncertainty in the beginning of the quarter?
Not really. It was pretty spread out throughout the 3 months in this quarter. But having said that, it's of course always difficult to understand the exact timing effect. A lot of decisions made in early April were maybe already made in late March, and then the orders came in. So it's a bit difficult to draw too much conclusion around that, to be quite frank.
Understood.
So pretty safe.
And good. And on Demolition and Tools, as you said, you saw some early indications of improvements in the past quarter. You said it stabilized on this level. Do you mean, so to say, that underlying demand was relatively stable, or on the same level, or that you see that the growth rate, so to say, organically, is what you expect or see in the quarter?
Well, I'm not saying that, things is in demolition tools or construction activity is back to the heydays. That's not what we're saying, but at least we now see also this quarter some organic growth in this segment and from not great base levels, but at least that's a positive sign compared to how things were in the past 2 years, you can say. So that's what we see now, and yes. So at least maybe it's because we have weaker developments in the past, and therefore it's easier to remain stable. But also in second quarter, it felt pretty okay compared to if you take, for example, system solutions, we had more decline in those areas from higher level, obviously.
Yeah, and I think in last quarter there were underlying in demolition tools also pretty broad. Was it similar in this quarter, or were there certain areas that stood out?
No, but I think the problem with demolition tools is that it's always a bit, difficult with that area of quarter by quarter. It can be a bit volatile. And we saw also the margin in this quarter was slightly lower than last year, and it was, I think, slightly higher in the first quarter. So these type of effects has always been there in this area. I think the main message for demolition tools is that we have seen now the first 6 months with some organic growth and overall at least stabilizing so far. That does not mean that we know exactly how things will move in the next 6 to 12 months, but at least that's the indication we have now.
Okay, very good. I get back in line. Thank you.
Thank you.
The next question comes from Karl Bokvist from ABG Sundal Collier. Please go ahead.
Thank you. Good morning. The question I had was just one point, if you could clarify when you talked about order books and how order books kind of were short and that the sales matched the current demand. Was that to comment on demolition and tools specifically?
Yes, this was my comment trying to indicate, we have short order books and demand in the second quarter, or sales in the second quarter showed some organic growth, of course, negative foreign exchange effect. So that was an indication to show that at least, stability was there also in the second quarter on the overall level.
Understood. And then the follow-up is how one should think about the order book duration for areas such as environmental, transportation, special products.
In general, we don't. If you take the whole Lifco, we don't work with long order books. Then we have specific areas, where we have longer order books. But if you take that as a relation to the whole Lifco, and even within the subdivision, it's predominantly we have talking about 1, 2, 3 months order books in general. And then there are a few exceptions where you could sit up with 6 to 9 months order books when you have more bigger type of I wouldn't say projects, but bigger deliveries that requires more planning and more adaptation to customers. But in general, it's quite short.
Understood.
It's normal. I mean, it's the only exception when we had order books going up was during the aftermath of the COVID situation where supply chain and all that happened. But that's the only time we had that situation.
Understood. And then the comments here, or that's perhaps demolition tools, that things might be improving now. Do you think we could have a similar expectation for the infrastructure products area?
Well, first of all, we haven't said that things are improving. We just concluded after 6 months in demolition tools, we have seen a stabilizing and some growth. So we have to be clear around that. We don't forecast the future in Lifco. Yes, you could say that the infrastructure product is the area within solution with the most commonality with demolition tools. It's not 1-to-1, but it has underlying market some similarities. Yes, and you see that also in the numbers if you look at.
All right. Thank you. I'll get back in line.
Thank you.
As a reminder, if you wish to ask a question, please dial pound key 5 on your telephone keypad. The next question comes from Mats Liss from Kepler Cheuvreux. Please go ahead.
Yeah, hi, thank you. A couple of questions. First, on dental there, you mentioned the Easter holiday had a somewhat negative year-over-year impact. Well, the question is it back to normal now? Should we expect dental to perform here in the third quarter as normal?
Yes, dental historically has been a quite stable business area. And the reason we mentioned this Easter effect, that it kind of impact between the first and the second quarter. Now, when we sum up the first half of the year, that effect is, of course, not included in the total numbers. So from now on, we have no such effect for the rest of the year.
Okay, great. And then, I mean, you mentioned the 9 acquisitions made so far this year. I mean, it seems, well, it's a pretty good momentum, I guess, and they will add on gradually. Is it sort of a, well, momentum will continue throughout the year? I know you don't give any forecasts, or it depends, but what about the backlog there? Do you see continued opportunities, of course, but can you say something about the outlook for the second half and next?
Well, I've got this question, I think, many times in the past, and the way I usually answer is that you know, you could say that the theoretical backlog is always very, very full, but you never know when a transaction materialize. You have to keep in mind that we only acquire companies when we feel comfortable taking on the risks in the companies we evaluate, and where we think the valuation from a Lifco relative valuation perspective, when we look at different opportunities out there, is reasonable. And therefore, you know, the theoretical pipeline is never a perfect indication of how much will come in the next 6 months. But I can only once again say that we gradually increase our activity levels. Every year we look at more opportunities. So hopefully this will over time lead to a gradual increase in the acquisition activity. I think that's how we have developed it during the last 5 years, that we gradually do more and more. But in any given year, does not mean that, you know, we will, you know, by default make more acquisition than previous year. But on average, more activity should lead to or more opportunities should lead to hopefully more transactions. But we are also very prudent. So if we don't feel comfortable, then it could be, you know, a weak quarter. And we've seen that also. If you look historically the last 2 years, I think there's been periods of sometimes 5 months without any announcement from Lifco. And this does not mean that we are not very active behind the scenes, so to say. So very difficult to predict when things will come into play. I normally also say that it's only, I think, a week before signing where I can actually say that this is a very hot lead, because there's so many things for us to feel comfortable to make an acquisition.
Thanks. And finally, just so I got it right, about the inventory build up there in the second quarter, is it sort of well, made now, or should we expect the inventories to continue to be a bit on? Well...
You mean the comment around the working capital effect and contract manufacturing? Is that the question around that? Yeah. So it depends. It depends on what happens with deliveries in that area. If deliveries continue to stabilize and we have you know, stable and good development in that area, then this should hopefully improve in the second half of the year.
Okay, great. Thanks a lot.
Thank you.
Next question comes from Karl Bokvist from ABG Sundal Collier. Please go ahead.
Thank you. I just had a follow-up here, if just for kind of a bit of clarification, also going a bit more just into the subdivisions of systems. Transportation and special both, to my understanding at least, grew quite nicely last year. So I'm just curious to figure out here if, it's also partly tough comparables when we just look at a year-over-year basis, or if it's more that the kind of collective end market situation for the companies in those divisions have worsened.
Well, that's a very good question. I think it's a bit of both, to be honest. We had very good development in many of these areas in 23, 24, and now slightly weaker development. But also, so it's a combination of tough comparison and then maybe a little bit weaker demand in this quarter. So it's a bit too early to draw maybe a major conclusion around that, but yeah, that's where we stand. But you're right, Carl. It was, I think, in some of these areas, very good performance last year.
All right. That was the only follow-up. Thank you.
Yep. Thank you.
As a reminder, if you wish to ask a question, please dial pound key 5 on your telephone keypad. There are no more questions at this time, so I hand the conference back to the speakers for any closing comments.
Yes, thank you very much, everyone, for listening in and for the questions. And I wish everyone a nice day and look forward to talk to you in end of October again. Thank you very much.